Hello, this is the tradesight U.S. stocks and futures market preview for the week beginning Monday the 9th of September 2019, ending Friday the 13th. Friday the 13th. Look out for that. Here's a look at the ES front month futures contract. This is the daily chart of the broad market futures form. So usually the markets start to pick up and get exciting post Labor Day. We had a hurricane. Obviously, again, these hurricanes are getting later, so they're impacting the East Coast. And it has an impact when it hits Florida, New York, and some of the big money centers. Charlotte, North Carolina, also impacted by this. So, it slowed things down a bit more this week than usual. I think we would have picked up. It was an okay week, anyways, but it wasn't very exciting. A very few trades, a handful of trades, and it is what it is. But you got to be ready because this is the time of year where things tend to pick up, and usually it's the first few weeks out of the gate that are some of the easiest once you just get the market direction right and go from there. It's also one of the most negative times of year now through about middle of October. Some of the easiest money you'll ever make. So we'll see what happens. Here's a look at the ES front month futures contract. This is the daily chart of the broad market and futures form. I actually climbed back up on Wednesday and Thursday here a bit, get out of that range that we were in for literally a month. I mean, we spent 3.5, 4 weeks in that range after we sold off from the 13 sell signal that hit back at the start of basically 4th of July. That risk line is still resistance, and we have not remotely fulfilled it. The risk line should still be resistance, and the red line is the target, or else a new number startup phase to the downside, which so far no sign of that. So you got to have a bias to the downside, but if we break that risk line, all bets are off, and then you probably would run. Be a strange time of year to run, though, so we'll see what happens. Obviously, a lot of eyes on China and the deals there, or lack thereof, and the fact that doesn't seem likely. The hurricane being over is one thing. Avoiding Florida like it did, even though it destroyed the Bahamas. There's just a lot of things going on, and they're not normal things for the stock market to deal with. But just remember, you're at that time of year where the federal budget for next year starts to get picked. That's what usually causes the breakdowns in the market. And so it's just a lot going on. We have to be very clear here. If we don't get good movement and good volume, okay, then we don't, and that sucks. And we're not going to, you can't expect a lot out of the stocks if there's no good volume in the market. We all know that. That's how we teach things. But usually this is where it starts to pick up. So be ready to go when it does, because this is it. This is the moment you want to be ready for in the stock market. All right, let's go through the daily charts, then we'll look at the intra-week action. Go from there. So crude oil up 52 cents. That's 57.04. Not a big deal. Gold down $2.70, but still hanging closer to all-time highs. The S&P cash literally gained 2.71. Look at all the gaps, by the way, on the S&P here. The NASDAQ 100 down exactly 10 points. Very, very gappy. A really gappy NASDAQ over the last month. And it was a horrible week. You'll see it when we show you the intraday action. SOX gains 2.13, which is a blip. So Friday was a bust, and we knew that was going to happen. The biotech's down 6.43, hanging near the lows of the year. Russell 2000 down 5.57. The VIX closes down at 15, down 1.27. So that's interesting heading into October. Remember, September is one of the most negative months of the year, but October is where we bottom out typically from that move, and yet here we are acting like everything's good, but there's no volume, so everything's not good. When the volume picks up, what happens? That's what matters. Trend 1.16. No big deal there. Advanced decline rate, volume on the NASDAQ 1.8, and that's really that's the 10-day moving average, but volume has been very light compared to what we saw most of the year, as you can see. So that's really a problem overall. Here's a look at advanced decline ratio on the NASDAQ plus negative 201 on Friday, on New York plus 401. Google loses 5.87. Apple loses 2 cents. Netflix down 308. Amazon down 721. Tesla loses $2.13. Facebook loses $3.41. Goldman Sachs closes up 16 cents. That's a blip for Goldman. TLT, the 20-year bond ETF, is hanging near the highs, up over a point again. Dow was up 69 points, and it is what it is. All right, in terms of, here's the thing. Switch to 10-minute charts on the ES front month futures contract, and what do you see? Remember, this was Labor Day, so Monday we were closed. So it was a short week. Tuesday we had gapped down a little bit. It was a very flat day. We closed where we opened. Horrible. Wednesday we gap up, so that fills the gap down from Monday. And also fairly horrible. An eventual drift up, but just horrible intraday action. Thursday, the gap up in the first 40 minutes, you're like, oh, look, this could be exciting, and then just dead flat. And the entire rest of the week, the rest of Thursday after the first 40 minutes, 50 minutes, maybe 60 at the most. And the rest, and Friday was horrible. So it's just a horrible trading week and light volume and just nothing going on. And it's really disappointing to see. And if you look at the NASDAQ side, it's really not much different. So this is not what we trade off of. We teach people to make money when it's easy to make money and not do stupid things when it's not easy. So we had a few trades, and just like the prior week, actually we did more winners than losers, and it is what it is. But it's not if you're looking for 20 trades in a week and not just 6 trades in a week, we just didn't see it. So it is what it is. Take what you can get involved. Make sure you don't lose your ability to trade. Make sure that you're prepared for when things start to go again, because if you miss the excitement when it starts out, you're pretty much shouldn't have been here the whole time. Charts as usual. Economic data. Sorry. Monday, consumer credit debt. These are Pacific time, so 3 p.m. Eastern. Tuesday, 6 p.m. Eastern, 6 a.m. Eastern time. NFIB Small Business Index. 10 a.m. JOLTS job openings. Wednesday, PPI, 8:30 a.m. Eastern time. Final wholesale inventories at 10. Crude oil inventories at 10:30. 10-year bond auction at 1. Thursday, we've got CPI at 8:30, an hour before the bell. That's one of our big 3, along with initial and continuing jobless claims. Natty gas at 10:30, 30-year bond auction. Federal budget balance at 2 p.m. And then we've got retail sales at 8:30. Import-export prices at 8:30, preliminary University of Michigan sentiment at 10, and business inventories at 10 a.m. So there's some data. I wouldn't call it the most amazing week of data. I'm not sure that's what's going to kick us off. What should kick us off is it's that time of year. So hopefully we just get to work. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading.